Hey traders, it's Leaf West. Apple. I'm just going to go through my current view of Apple and put it out there. So let's start with the big picture weekly view. Here's a weekly chart of Apple. And if you go back in time, it's been a heck of a stock. You go back really to, well, let's go back to the mess of 2008, 2009. And all it really was a ABC correction off that high back in late 2007 when it went down to 80 bucks, I think, if I remember at the time, 80 some dollars. Yeah, yeah. And then really it's been an uptrend since. We had the flash crash back in May of 2010, which actually took out the lower ATR support level, which caused the upper resistance line being put in, and we took that out, and it has not crossed that ATR support resistance line since. And lo and behold, though, we have put in these extreme trend strength dark blue candles with divergent dots. So that tells you that if you look at here, it is right there. There's my trend strength indicator, and it peaked basically. Where did it peak? It peaked right on that upper candle, right on that top candle, where we put almost in a kind of a inverted hammer, almost, or not a shooting star. I wouldn't say that it's a shooting star, but anyways, so I look at momentum, right? I like to watch momentum because momentum precedes price. And whenever you have these kickoff moves with big momentum indicators, that to me tells me that the low of this indicator was put in on the low price candle. And I can't find too many cases in my history of trading where that doesn't lead to at least a retest of that price, the low of that price. And typically what it does is it puts in a lower price, which puts in a divergence in the indicator. So in theory, what I think is going to happen is somehow we're going to get down to, I don't know what the price, below 500, I believe. This price was 527. What was the low of that price? 528.66. So I think we're gonna beat that. We're gonna get lower than that price, and this momentum indicator is gonna get down and make divergence somehow. And then all you've really done is you've corrected this overbought situation on a weekly basis. And if you look at where you should draw this, really the last leg of this move is from there probably. So let's just draw a retracement grid from there. Right. All right. And we're not even at. Oops. We're not even at 50% there. So we could go down to, you know, we could go down to $400. We could go down to the top. We could go back to the consolidation of this late summer, early fall of 2011 levels, and that would still be a normal correction in this weekly chart, and then you could still go on to make new highs. So that's, and if you look at where we're making, it looks like a shooting star right at this upper resistance ATR line with this week's candle. So we'll see what happens with this candle going forward. But it looks, to me, the weekly chart is really, it's not something that looks really bullish. Let me just get up the daily chart now. Hang on a second. Okay, the daily chart's interesting. Again, we had this big push up from last fall. It was unbelievable, right? We came out of this yellow candle contraction mode, had a fake out to the low side, and then off to the races. And again, we really didn't cross the lower ATR line until, what date was that? A big range bar on April 16th. But we were putting in, you know, extreme trend warning. Let's take a look at the trend here. Trend strength. Again, trend strength really peaked on this push here in early March. Price kept pushing higher, right? So we had divergence here in terms of trend strength. And we finally broke the blue and flipped to green. Again, blue is when it's above 100. And you can see on the MACD, let's see the MACD. So on the daily basis, we had extreme trend candle on these 2 wicks here, and we did break the low of those prices. So that our momentum indicator did what it was supposed to do there. But if you look at the volume zone oscillator, it just ran out of steam, right? We kept on making these lower highs. It stayed above the 0 line, so it still was bullish volume, but it ran out of gas, and it crossed from bullish to bearish on this candle here before the actual break of the ATR line, before it turned red. Really, it broke on the first green candle here when it flipped from blue to green on April 11th. That was when the volume zone oscillator went negative, and that was I wasn't on top of that at the time, so I did not catch that flip over. So if you look at the daily chart, it's been interesting. Okay, I've held out that the 71% figure on resistance was important because the last April, or this past April's earnings pop price stopped at the 71% retracement line. So I used 71% on this minor wave, the second push down, as resistance, and that I tried to actually short Apple there, and it or back here, I forget when it was, back here I think it was, yeah, it was just recently, and it didn't hold. And then here's 71% of the entire structure, and that didn't hold. So to me, that's pretty bullish. But I step back and again I think about that weekly chart, and I think about where we are. We're at the 78.6. So really, for that weekly chart to do what I think it's going to do right now, in terms of this weekly push higher failing, and then we're going now to take out the low from May. It really has to stop going any higher, right at this sort of 78.6 level. And we'll go through the current chart. And so for those of you who don't follow my blog readings very often, I did this symmetry line at 1.35. This 1.35 is this length of the C wave versus the B to A extension. And so I took that exact number 1.35 and extrapolated it on this C wave, this bigger C wave. And on the 18th, I blogged in real time that I thought that, and there was time reasons for it as well, but I thought that could be that could be an important low for Apple, and sure enough, it was. So time symmetry works, and I'll show you on the 60-minute chart what happened yesterday in terms of time symmetry. But so this is where we are in the daily chart. It's pretty. It looked like pretty bullish action, and it has been pretty bullish action the last several days. So the bulls aren't going to give up easy on this one. So I'm not so sure that my weekly forecast for this push higher, maybe it chops around higher before it rolls over. I don't know. But that weekly chart just scares me a bit in terms of thinking that we're going to go and make new highs. It's just a lot of bullishness on Apple that has to be worked off. All it is is a corrective wave. And if you were to say, okay, if this is a B, C, just a simple A, B, C, you gotta reverse extend this, and that's about the right spot. And that takes just a normal ABC, takes me down, right? A, B, C, and that would be perfectly normal on this daily chart. And that's not even, that could be the bigger A on a weekly chart, and then a higher bigger B and a bigger C down to that $425 level. So we'll see what happens here on the chart. You can't predict where it's going to go. All you can do is we're in resistance on the daily chart, so you have to drill down to the 60-minute chart to see if you get a churn. If you get a churn lower, but this is what I sort of think on Apple. Doesn't mean I don't trade Apple to the long side, because I do. So let me go to the 60-minute chart and look. So here, let's go. look at the volume zone oscillator. And made a lower high there on a daily basis. But we're still on the bullish side of the zero line, so take that for what it's worth. Let me pause this and get the 60-minute chart up. Alright, so here's a 60-minute chart. So after our low in May, where we had extreme trend reversal candles being painted, we have moved off that low price. And to me, it looks like A, B, C to here, and then A, B, C to a B level here, and then this push up was C. And I did a blog post a couple days ago where I looked at the time symmetry, and I went from, my time symmetry was from the low here in May, on May 17th, and that was 107 bars to this high. And I said, okay, well, symmetry would take me to this point here, but a C wave lots of times will end in the 100% time symmetry. It's 1.272 time symmetry. So I think I posted this blog. When did I post this blog? I think I posted on the I don't know when did I did it. I think I did it a couple days ago anyway. So it was before yesterday. It might have been this day right here, which was the 6th, I believe. Yeah. And yeah, because I think I was saying that this was ending possibly right in that slot somewhere. And you can see, if you look at the last push up, this sort of C wave, if you want to call it a C wave. And again, we like to see structure in our waves. And ideally, you'd get this kind of structure, right? You get A, B, C, and here's the C target from the extended C target from that level, and it hit almost perfectly this high here. So I thought that was a good reason for Apple to finish here. But you have to understand waves a bit and structure, and that it was like one wave motion up to the high, and lots of times what will happen right at the end of a wave structure that's only been one wave up is that you'll get a small minor wave to finish the move higher, because waves are trying to make two waves. They're trying to make structure, right? So this is its attempt to make that second wave, even though it's right at the very end and it's minor. And if you just take the minor wave and you extend it higher to see where it should go to 1.27, and it basically went right there. So when a minor pullback leads to a minor push through, and you see that time and time again. So I don't like adding to longs, or I like taking profits in these kind of push throughs. So we ended up the high, this 1.272 in time was 2 60-minute candle bars off, being exact. And this 100% line is my price symmetry from the bigger A wave. So it made perfect sense that Apple had a reason to turn here, and it did, and it made a higher low head divergence in our volume zone oscillator. So it had reason to turn lower. So now what happens? Well, if you look at where do we got here? Let's see, this should be, I'm looking at where price should go. All right. So if we just look at minor and major, this is major. All right, so this is major support. Major support for this price going forward is down here, and the first level of support should be on this last wave higher. So let's put up a retracement grid for that. Right. So if this was an important high, and I think it was, we're gonna go from an important high to the next layer of next area of support, which I think is down at 586 to 590 probably is where it's going to head. And if we were to gear this down even further to say a 15-minute chart, we're we're going to see the structure, a better structure so far on the move lower. And it's not going to go straight down. Well, it typically doesn't go straight down. And if you look at the move from the top here, it was been ABC. So after you have an ABC, you have to expect a retracement of that structure. And it could morph from an ABC into a 1, 2, 3. But let's just take a look at where I think it could possibly bounce to today. Right? Now, typically the 618 is where price wants to go, and that's right in this sort of previous high area and this confluence of price congesting right here. So that is right around 614. So I would say that I'm going to be looking to short Apple once it gets above 612.52, especially if we have a proper structure. So I'm looking for price to do an A, B, C into that, and then to roll over. And then if it made it to that level, my goal would be down around $600, 602, which is around this price confluence as well. So that's how I think Apple is going to go for the next several days. And then I'll go back to a 60-minute chart. And that blog post I did about time symmetry for Apple, I looked at from low to low was 70 bars. So then I said from this important C low to the next low could be around 100% symmetry as well. And that date is this Friday at 2:30 Eastern. Again, you can be a couple bars off, but there's a time value on Friday for being a low. So we'll see what happens if price can get down to that $600 level by Friday. And then you've had a bigger A, B, C down, and you'll get a retracement of that whole structure. And that is the circle of life. So anyways, that's, for what it's worth, that's how I look at Apple right now. We had a reason for that low, for that high yesterday. It was at a bigger level on the daily chart. It was at a completion of a pattern on the 60-minute chart, and the move down from the high made an ABC structure on the 15-minute chart. So that 15-minute chart is inside the 60-minute chart. And so the 60-minute move lower, the first 60-minute move lower is this ABC that we're looking at right now. And in that first leg down, if you look at it on a 15-minute chart, you can see the structure. So now I'm expecting a bounce higher on the 60-minute chart. So my target would be 612.50 to say 615 as a possible area for Apple to see resistance again. And that should happen today. And it's indicated right now. Where's Apple indicated? 606.51, 606.70. So wants to push, maybe doesn't want to push a bit lower. Let's take a look again at 15-minute chart. Could it morph into a bigger? Could it morph? Let's see. Okay, let's just see. Here's an ABC then. If this is an official ABC, we should be able to just reverse extend. Yeah, see, it's bigger than a normal ABC, so we have to assume that it's a 1, 2, 3, and a 1, 2, 3, and it closed above. Okay, so in essence, this is an extended wave 2 of a 1, 2, 3. So actually, I think we're going to push. My reading then of this, I'm just doing this now. My reading and then extended. That could extend down there for the second wave. Actually, there, right there. See, using the alternative method for a 1, 2, 3, we get basically right to where price was yesterday. So this could still work higher. But this would be a 1, 2, and this 3 wave structure. So that would be definitely the first move down on the 60-minute chart, and then we work a bit, and then we work for the B higher. Yeah, so that's, to me, that's how it looks now. Is that the push down yesterday was bigger than a normal C wave, and so it makes it wave 2, where we should get a complex correction from that. So we could push a bit lower here in price. What did I say it was again? It was at 607. So yeah, so it's around this 1.272 level. So we still could bounce from here, could go a little bit lower, and still maintain this sort of 1, 2, 3 structure. So this definitely will be this today. The next day or so will be a complex correction off of the low from yesterday. So it's a 3 wave structure. We're finishing the second wave, and the third wave tells us we're going to be lower. So if we take this off and say that we made the wave 2 low, and we extend from the wave 2 high, the wave 2 low, that is, get rid of this. So that is, oh, wrong one. Let me get rid of this so I can get the right one up here for you guys. Sorry, I'm mumbo jumbling around here. That is where I have my target for. And typically it's the 1.272. So it's at $600, which again gets me back to that price congestion from earlier. And again, my time symmetry says there's value with, where is it? There it is there. There's value right here at 2:30 Eastern on Friday. So for what it's worth, that's how I'm looking at Apple right now. And anyways, good luck trading, guys. We'll talk to you soon.